Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Monday, May 18th, 2015. All right, the announcements on Friday, they're all pretty much in line. We could jump back, I guess, and take a look at them right quick just to see what they were. Empire State Manufacturing Survey, missed. At least it was better than its minus 1.19 there. It's up a little bit, and it is in the range, in the consensus range, but still kind of missed the consensus number there. And then industrial production, off slightly, but kind of in line. It's nothing, it says it's stalling, down 0.3%. It's just lackluster. Everything's just, consumer sentiment missed big time. Didn't seem to bother the market. And Treasury International Capital, I'm not familiar with exactly what this means. Greater flow out than in, I guess, is what they're saying. So, greater than the prior. So moving on to today, housing market index at 10 o'clock this morning. And then kind of busy towards the end of the week. And speaking of the week, no video Thursday and Friday this week, and no video Monday and Tuesday of next week, because I'm going to Phoenix to visit family. My wife and I are going to visit her sister in Phoenix and her niece and great nieces. Let's see what's going on across the ponds before we get too carried away with my personal life here. Asia, mixed to slightly bearish, I would have to say. In Europe, mixed to slightly bearish there too, because we got a pretty big, I don't know, it might be a little bit bullish there. Not sure about which here. A few interesting things that I was looking at prior to the video today. Wow. $92,235. Yeah, right. I always try to quantify anything that they can to get you interested. Let's see how things are going here in the U.S. flat right now for an open, possible open. VIX is at 12.38, very low, very low. Gold at 12.29, looking very strong. What's silver at 17.72? I should go get my coins, I think, for the grandkids for Christmas. Now, let's take a look at the silver futures chart. Last week was a disaster, and I'm going to talk a little bit about last week. Yeah. It's a good spot, I think, to buy. So when I bought silver coins here, I bought them back here when silver was 19 something. Not a very bright move, actually, in reality. And then I bought some more here when silver was at $40. But anyway, I got it now, and it's my hedge. And that's where we're at. So, that might be a good point now. It definitely would be a smarter move than some of my other moves. Alright, back here, oil's at 60.85. Not much movement there. Dollar's at 93. Ooh, dollar's getting quite a bit weaker since last week. Weaker since last week. And against the euro, it's at $1.14. Almost even. All right. going over to the monitor tab, we're closed out of practically everything except for these cash indexes here, the Russell and the SPX. I wanted to give you a little bit. I did some heavy thinking over the weekend, and you can see here that a lot of these trades last week did not work out. The ones that have a date of 5/15 or of that week. Lost 46, made 140, lost 114, lost 396, and that one's not done yet. So, this directional trading is not working out in my mind. So I want to pull back from it just because you've seen the charts, and if you watch the videos sort of daily with me, you can see that we're getting whipsawed around like you would not believe. So in fact, right now, the CSSV2 trading methodology, at least with the 50 delta on directional trades only, is not working out right now. And you can see it pretty much when you take a look at things like, let's take a look at, let's go up here. Take a look at the cash index, or not the cash, yeah. Let's take a look at, I don't want to look at the Dow, but let's just look at Baidu. Just as an example, what direction would you think that Baidu is going? I mean, we had a good, solid downtrend here, we had all reds all across the board, and then it reverses on me and turns this thing into a loser. And this has been happening a lot. It was too early to get in here after earnings, to wait until things settle down. Things settled down, looked like we were in a pretty strong trend here, and it knocked me around pretty heavily. Now, the thing about going to some more conservative, or maybe even a delta neutral trading philosophy or methodology would be like doing iron condors or 20 deltas on the cash indexes, maybe even 10 deltas for directional trades on the cash indexes, simply because we can make money and be pretty safe. That's the key thing for me right now. So we can go back here, and I haven't posted this spreadsheet yet, but go back here and take a look at this and just see that since we've been keeping track of the detail, or even if we go back to take a look at the weekly here, it's been just not where we've been making the money. Actually has been on the cash indexes, and haven't been making a lot of money, but that's where we've been making most of the money. So I'm going to turn around and focus on cash indexes for a while, do a little bit more relaxed trading. Summer's coming up, I want more free time. Spent a lot of time Friday trying to exit gracefully out of some of these trades without getting too killed. And the one thing that I found out too here on this debit spread on Costco was that even though it was out of the money, when you want a debit spread to be in the money, so that's the thing about a debit spread, you got to be careful about being in the money close to expiration, but you want to be out of the money. And even though this was in the money, it didn't take a total loss on it. Total loss would have been 90 cents, only lost 67. Even though it was, if you look at Costco, you can see it made a pretty big move on Friday, and that's when I exited. I also got out of this one on Friday. Even though we had a big fat green candle here that went against us, we still we're not at a total loss on Friday, whereas where the credit spread we would have been. And I think it's because of the delta of the trade, and that it's not moving as fast once it gets out of the money. Delta gets smaller, so it's not moving 1 to 1 or close to 1 to 1. It's maybe moving 60 cents on the dollar, whereas something that's in the money might be moving 80 cents on the dollar. So I think that that's a good thing. When it goes bad, that's a good thing about a credit spread. Or a debit spread, I'm sorry, versus a credit spread. All right, so what are we going to do here? Well, we're going to stick to, and I'm going to do this across almost all of the accounts. We're going to stick to specifically SPX, but we'll play around with Russell and maybe NDX a little bit. But they make some pretty big moves, so we're going to stick with SPX, and we'll stick with SPX PM when the time is right. If we're looking at a regular monthly expiration, it'll be SPX PM, but they're one and the same, pretty much. And so here we have a bunch of trades on SPX right now. So I wanted to take a look at the big chart on SPX. Here's my big chart. All right, so here's the iron condor that is I think that is a June 2, I believe. So that's the second week in June. And then we have this bull put here, which expires this week, which is almost at 100% profit right now, so I'm getting out today. So we put a note here to exit SPX BUP. All right, so how are we doing with this iron condor? Well, it doesn't look too bad when we look at it this way. I took the block out of here because I thought that if we start doing multiples of these, it's going to be a little bit too confusing. So what I'll do is I'll just use these data lines here, these price level indicators, and I'm putting them at break even rather than the short strike. Doesn't matter a whole heck of a lot, but it's a little bit more accurate as far as profit and loss is concerned. All right, so how are we doing with? Well, it doesn't look too bad with this iron condor. Let's take a look on the risk profile. So looking here, we can see that maximum profit on this of 90 cents. And I have my price slices set here for 1 standard deviation up and 1.5 down, just because down moves usually happen quicker and have a higher velocity to them and are more powerful. So generally, as a rule. So this is what we're looking at. The shadow here is 1 standard deviation for this expiration, which is, as I said, June 2. So it's right here. So this is a standard deviation also. So you can see this red line here just meets right up with it. This red line is 50% lower than this one here. So we're pretty good on the downside, but are we? That's the question. Let's shut this one off and just take a quick look at the bull put that we have here, and you can see that it's about at 100%. So we'll be getting out of that today. Alright, so back to the iron condor. This is the one that we have to manage, and we might get into another one today. Depends on what the market does here. So we're already moving down a little bit here. So I might be a little bit more comfortable if we have a red candle for today, but not too comfortable, and I'll tell you why in a minute. And then I was doing a bunch of reading and watching videos, watching trading as a business videos, which is what the course was when I took it, but it's now is a trading pro system, and listening to David and how he would adjust, and reading other websites and other option-oriented iron condor specific type websites and how to do corrections. or just, what to do. Do you just get out? Do you roll? Do you just roll the top side? Do you roll the bottom side? Do you roll both sides? It all depends. It all depends. So I was looking at a bunch of different rolls here for June 2 and what I could possibly do. And then I was looking at a new iron condor, which is down here. So let's turn this one off. I hope I'm not confusing you too much. This would be a new one that is looking to do. And this one, we're talking about maybe pulling in 100 per lot on these things, which is good, I think. You pull in $100, and the commissions for me $1.25 per contract. So there's 4 contracts, so it's $5 would be taken out of this profit. So this would be $95 if it closed totally 100% profit free. But there's exit strategies, just getting out of the short and stuff like that. So we'll be looking at that as we get towards the exit of this particular iron condor. Not this one, but all the iron condors. If we buy back the short for a nickel or less, there's no transaction costs. So that $1.25 for buying back that short, they won't charge it. They might charge an exchange fee, which might be a couple pennies or something, but usually that's not too much. So here's the next iron condor that I was thinking of, just to let you know. I might do that today. I might leg in. If it's market's trending up, I might leg in with just the put side first, and then when we get a little pullback, like a little move back, like we might have today, then I would do the call side. I'll let you know how I'm going to handle that, but I wanted to go back here to look at this existing one now, if we have some concern here. Oops, shut this one off. This would be, like a portfolio view here, and looking pretty nice here. But just to look at this particular iron condor, you might be wanting to think about doing an adjustment on this. Alright, let's go to the big chart, as I call it, the big chart. No studies whatsoever, just nothing but price. So, back in September and October of last year, we had a big correction. Well, it's not really a big correction, and by definition, it may not even be called a correction. So what I did was I just took this and did a trend line on it. Oops. And how big was this particular move? So this is sort of defines the velocity or the volume of this move from a price perspective. I take it and move it over here, and it's pretty easy for us to see this was 1, 2, 3, 4 weeks. In 4 weeks we could have a move like this. Let's see how big 4 weeks is. Okay, yeah, that's exactly 4 weeks. So in theory, in 4 weeks we could be down here based on past history. Hasn't happened very often, but it could happen. So that was kind of a big one. This one, not so much. We can probably absorb that one. But a big move like this one might be a little bit difficult to swallow. So we have to be careful for that. We're not, these are high probability trades, but they're not exactly guaranteed. So we do need to be careful about that. So let's just kind of move that over here for now. And now we're thinking about another iron condor and or a bull put for this week. So we're already at 20 minutes on the video, and I haven't even done the scan yet, and I'm not going to do the scan. I'm just going to focus on this, and let's take a look at our RUT trade. Russell, this is June 2, so we're still on June 2. So our deviations here, we're sitting at, we have them set at 10%, so let's go set them up the same, plus 1%, or 1 deviation, and minus 1.5. Doesn't really apply to the downside here. So I might condorize this. I could condorize this, especially if we have a nice pullback today. I might go and do something. Maybe, let's see, this is June 2. So to condorize it, I would do a bull put. And we would do it at a 5 delta. And if we did one at a 5 delta, that would pull in 17 cents. That's pretty decent. And we'd be at 11.35. So 11.35. Is that true? 11.35. Wow, that's way down there. That's down here. That'd be a good iron condor, wouldn't it? So we're going to have to do a big chart on RUT as well. So 11.35 would be right around here someplace. Seriously? I might want to condorize that today, especially if we're going to get a little bit of a move down here. So I might want to condorize RUT. So RUT condorize. And I don't think I'm going to do anything else with RUT. SPX. If we get a little bit of a pullback, we'll have to see how SPX is today and how RUT does. I mean, if these numbers start getting bigger, then we're going to wait until the end of the day. Might even wait until tomorrow. So you folks, you know how to do the scans yourself on these. You've watched, some of you have watched plenty of videos. You can do the scans. Me, I'm going to stick with what I would consider more of a relaxed trading for right now. More neutral, delta neutral, and more, more out of the money, I guess you might say. Less directional bias on my trades. Maybe for the whole summer, maybe for the rest of my life. I guess that's part of being a guru. I don't know. I'm really no guru. I just thought it was a cool name. I just like to trade, so you guys know. I make mistakes too. Not exactly perfect. We all make mistakes. So thanks for watching. I hope this wasn't too wordy for you. We'll be looking more into delta neutral trading, more trading as a business or trading pro type of positions, trying to keep us safe and trying not to lose any money, getting out before it gets too bad. So that's it for today. Thank you very much for watching. Have a great day and happy trading.